The US-China trade war has escalated once more. In April 2025, former President Donald Trump, now back in the Oval Office, imposed a new round of tariffs on Chinese goods. The tariffs, reaching a staggering 125%, sent shockwaves through the global economy. China responded swiftly with retaliatory tariffs of their own, targeting American goods with an 84% levy. The trade war, which had simmered under the Biden administration, roared back to life, threatening to inflict significant damage on both economies. This latest chapter in the US-China trade war is a stark reminder of the deep economic and geopolitical tensions between the two superpowers. The escalation of tariffs is a significant blow to businesses and consumers on both sides of the Pacific. For American businesses that rely on Chinese imports, the tariffs represent a substantial increase in costs. These costs are likely to be passed on to consumers in the form of higher prices, potentially fueling inflation. The tariffs also threaten to disrupt global supply chains, which have become increasingly intertwined in recent decades. To understand the current trade war, one must delve into the historical tapestry of US-China relations. The story begins in 1972 with President Richard Nixon's historic visit to China. This diplomatic overture marked the beginning of a new era of engagement between the two countries, ending decades of estrangement. In the following years, trade between the US and China flourished. American businesses were eager to tap into China's vast and rapidly growing market, while China benefited from access to American capital and technology. This period of engagement culminated in China's accession to the World Trade Organization in 2001. However, this integration was not without its challenges. As China's economy boomed, so too did concerns in the US about unfair trade practices, intellectual property theft, and the loss of American manufacturing jobs. These concerns erupted into the open during the Trump presidency. Trump argued that China had been taking advantage of the US for too long, benefiting from unfair trade deals and lax enforcement of intellectual property rights. Trump's decision to impose tariffs was driven by a complex mix of economic and political calculations. On the economic front, Trump sought to reduce the trade deficit between the US and China, which had ballooned to record levels. He also aimed to protect American jobs and industries that he believed were being harmed by unfair Chinese competition. However, Trump's motivations went beyond economics. His tariffs were also a way to project American strength on the world stage and signal a departure from the more conciliatory approach of his predecessors. Trump's tariffs, however, came with significant risks. Economists warned that they could backfire, leading to higher prices for American consumers, job losses in industries that rely on Chinese imports, and retaliation from China. Despite these warnings, Trump pressed ahead, confident that his aggressive approach would ultimately force China to capitulate to his demands. However, Trump underestimated China's resolve. Xi Jinping viewed Trump's tariffs as an affront to China's national pride and a challenge to its growing economic might. Section 4. China's resilience and retaliatory arsenal. China, with its vast manufacturing capacity and deep pockets, is well positioned to weather the storm of Trump's tariffs. Beijing has several tools at its disposal to mitigate the impact of the tariffs and retaliate against the US. One of China's most potent weapons is its control over rare earth minerals, essential components in many high-tech products including smartphones, electric vehicles, and military equipment. China supplies over 80% of the world's rare earth minerals, giving it significant leverage over the US and other countries. Beyond rare earths, China could also disrupt global supply chains by delaying shipments, imposing stricter inspections on American goods, or encouraging boycotts of American products. China could also leverage its massive domestic market, which is now the world's largest, to support its own companies and reduce its reliance on American goods and services. Xi Jinping has used the trade war as an opportunity to accelerate China's push for technological self-sufficiency. Section 5. A battle with no winners. The US-China trade war is a dangerous gamble with potentially catastrophic consequences for both countries and the global economy. While Trump may have hoped for a quick victory, the reality is that there are no winners in a trade war. Tariffs are a blunt instrument that inflict pain on businesses and consumers on both sides. They disrupt global supply chains, raise prices, and stifle economic growth. The trade war also risks escalating into a broader geopolitical conflict. The rivalry between the US and China is about much more than just trade. It is a competition for global influence, technological supremacy, and ideological dominance. The trade war is just one manifestation of this broader rivalry, and it has the potential to poison relations between the two countries for years to come. The current trade war is a wake-up call for both the US and China to find a way to manage their differences and build a more constructive relationship.